Okay, with that, I think we can kick off our panel. If Rag later join, then we can have him join later. So with that, I want to first give the chance for each of our panelists to introduce about themselves. Quickly, in one sentence, including your name, which firm you are with, and the area of investment you focus on.
Alex Marquez, Experian Ventures, about a $500 million under management, and invests in the large financial services ecosystem.
Hello everyone, my name is Benny. I'm a principal at Acorn Pacific Ventures. We're early stage focused fund based in San Mateo. We do AI and different kind of enterprise SaaS tool.
Hey everyone, Brian Liu here at Alumni Ventures. I invest in AI video to explore the future of storytelling and full stack AI to build autonomous companies.
Hey guys, once again, good afternoon. Vince Scully, LP2 early stage GP funds focus on impact tech funding. The thesis is to impact a billion lives over a period of 10 years. Check size up to 25 million, minimum 250K, average size 7.5 million.
Okay, thanks a lot for sharing. Yes, a couple of you have talked about the trends for 2025. Well, I think Brian and Benny hasn't shared their insights. So curious for you two, what's your observation for 2025? What are some of the high-level trends? Maybe in a couple simpler sentences you can quickly share in your sectors.
So actually, I think there are two questions you asked, but I'll quickly break down into each. So some of the deals we have done this year, including AI infra, agent, and different kind of SaaS tools. The trend-wise, I think the first trend I've been observing is there are a lot of companies they're building the kind of this similar product, similar technology. It's a little bit hard for us to differentiate which one is better than the other. So I think for that reason, recently we have been looking more into the what we call the domain-specific, industry domain-specific solutions. So that's one observation. And second, some of our winners in our portfolio this year, and also like outside our portfolio winners, when we're observing, I think one thing they did it right in common is they try to embed their product and solution into their customers' workflow. So it makes them kind of immune to different kind of attack. Say they're more harder to be replaced, and in order for also helping them to sign a bigger contract. So these are kind of the two trends I observed for this year.
Add on to Benny's point, since I invest in both consumer and enterprise, one trend I see is in this AI technology trend, consumer is moving further than enterprise. Because the AI booming starts from late 2022, and the first killer app is ChatGPT. It is a consumer app, very different from like past technology wave like mobile and internet, where you see enterprise use case is very early as well. But now I think enterprise AI is still very early, and I think the reason is that because the nature of AI as a technology is uncertain. You put the same prompt into ChatGPT, every time you get slightly different answer. In consumer use case, this is good. Like you're chatting with AI, you're fine. But in enterprise use cases, consumers, the companies, they get used to you getting reliable and accurate outcome every time. So AI, that's where AI faces challenges. I think as founders building enterprise AI products, one, you need to obviously improve your accuracy when building enterprise AI to showcase to your customers. And I think another thing really important to do is to educate your enterprise customer so that they embrace the uncertainty of AI and try to work with the controlled chaos so that the business can still increase the efficiency with relatively not 100%, but maybe 95% of accuracy. So once the education is done, I think that's when enterprise AI will start to accelerate.
Yeah, thanks for sharing. It's an interesting insights about your view of consumer versus enterprise. And thanks, Brad, for joining us as well. And with that, I want to introduce the next question, actually focused on B2B versus consumer. Because monetization for consumer has been pretty hard recently, like with the Skyrack acquisition costs and a lot of the AI company who are doing consumer or even maybe for smaller business, they have to burn a lot of cash to acquiring all their customers, try to be sustainable and promote their product. And so curious for your experience, some of you focus on enterprise, some of you do both, some of you do B2B. Maybe share some of your viewpoints on those, like when you are doing investing, which of the two sides, like B2B versus consumer, you are looking at, and for some of the challenges of doing consumer, what you have been focused on in order to select what are the winners for those markets.
I can start, if that's okay. So I think we have to look for scalability, what technology could be scaling towards to, and what's the end goal look like. For example, the thesis is that how can AppLovin, which came almost 2009, and they just had a very broad idea about like, I want to be that app person throughout the whole cycle of consumer. So I basically took a chance on that, and they are right now on S&P 500. They got into the exchange 3 months ago. But that's a grind you have to go through. So you have to look for the particular mode, and you have to be that dedication on that. Other things on enterprise, you have to think very differently. Enterprise, you have to keep reinventing. Yes, it's a very critical word. You don't have to keep inventing, but you have to keep reinventing. For example, when there was a whole blockchain problem happened and the thing in 2019, everybody was trying to do mining. Well, there was one company which thought, okay, we're going to stop everything and we're going to rewire. Yes, they wanted to rewire themselves to reinvent on GPUs because they had enough domain expertise, but they were not sure how to go about the knowledge they have. So they focused on enterprise by saying, from blockchain, we're going to go do mining on the GPU. Then that was CoreWeave. That went public this year in March and had 400% growth over the NASDAQ. So I feel like you got to have the grit, and most importantly, you have to have a complete structured roadmap, and most importantly, obsession with that problem. And sometimes you have to pivot, but sometimes you have to reinvent. So enterprises do like founders who reinvent, but consumers are more about ease of use, like Instagram. If you know, the Instagram was only successful, which I never invested. I wish I had. But there was, Kevin was thought was the frustration. The biggest F word in the startup world is actually not a founder, it's not fun, it's not funding, it's called frustration. My whole first startup was frustration, second, third, fourth. I never had an idea because I believe ideas get copied. So invest in frustration, wherever the frustration is more, go and angel invest and also keep reinventing. That's a mantra, whether you go enterprise or angel or consumer, we got to have laser focus. Thank you.
So in reinventing and find the modes that can help you quickly to scale. Are the two some? Okay. Anyone, Raj, do you want to share?
If you had to choose between consumer and enterprise, I'd say just skip the consumer at this point because there's so much alternatives for every solution that you can come up with. It might be a very contrarian suggestion, but at least on the enterprise side, security is still completely up for grabs. Nobody actually knows what model security is even. There are no standards. NIST has some vague guidelines, but it's extremely unclear what model security is, what prompt injection can lead to what kind of problems. So that's still a very open area. So,
Alex,
We're still talking about consumer versus B2B. Like some of the most valuable companies out on the planet today are direct to consumer, so I wouldn't discount the direct to consumer model. It actually works. There's a lot of money spent by advertisers to get in front of those eyeballs of direct to consumer. So there is a business model that supports it. It's just differentiation and I guess churn is very high because direct to consumer value proposition tends to be one that can be easily replicatable unless you got some unique mode, maybe you own content like a Netflix does. But on the enterprise side, the difficulty there is customer acquisition and time to revenue. Selling into a financial services institution like I invest in, you're talking POC plus 12 months before you get to a contract. Whereas in the direct-to-consumer space, someone will try your application within 24 hours, like it or not like it, and they'll be a customer or not a customer. You'll find out very quickly. So I wouldn't discount one versus the other, but there's definitely, it's hard to say one is easier than the other. It's just but both equally hard. I think the easier one is a direct-to-consumer. It's just you run the risk of being easily replaced because you're not, the de facto standard within an enterprise. It's going to be ripped out.
Yeah, thanks a lot for sharing all those two sides for B2B and for consumer. With that, I think several of your presentation and the speech also touched upon the agentic AI, and many people comment the next phase for agentic AI is full autonomy, which can be everything automated, not just for workflow, but also for the whole economy. So one question I had related to each of the sector you are in, what are the trends you're looking at for the full economy? For example, for payments, I've heard a lot that people were thinking in the future there will be fully automated settlement, or once you match the identity of the different transactions, just let the machine do the transactions themselves. And in the future, all the settlement or negotiation will handled by machine agent with another machine agent. So what's your view on that? I first started with payment, but that's just an example. Please think about for your own sector, some of the autonomy use case, and want to hear about your thoughts on those.
Yeah, we talked about this before ahead of time. So definitely we are deeply involved in the KYA space. So if those are not familiar with KYB versus KYC versus KYA, which is now Know Your Agent, and that entire journey now requires some level of authentication of the actual agent who created it. Has it been compromised? Has it been authorized to go ahead and make not only search results for you, go buy a toaster for you, but also complete that transaction. And on the flip side of that is the opposing agent for whether or not you're at a commerce site or a shopping cart on the way out. So that is a real risk, because in the KYB, KYC space today, certainly when you're on board a new customer to a financial institution or financial product, you're always doing background checks. You have histories on the individual's web browsing history. You may have it tied to a physical ID, which is what Experian has. We have, obviously the PII on an individual, their mobile phone number, their address, where they live, all this other history stuff. That becomes problematic and not trivial on the agent side, although you think it would be because it's largely software related. That for us is an opportunity. I think this is a real risk at the same time. That's why you see some of the commerce sites actually blocking agents coming through the front door, because they're not quite sure how to authenticate and ensure that the activity of the agent coming through the door on the URL is really authenticated to go out and do this search query and make a purchase. So it's a real opportunity for us. I don't know. I think there's a lot of unknowns out there. Largely, there's some standards being proposed. I think it'll eventually evolve to a point where it will all run smoothly. It's going to be running on the rails on the payment side. To your point, whether it's Visa or Mastercard, pay with card, pay with wallet, pay with crypto, stable coins, whatever. It's just too early right now to tell. And the last point I would make on that is, as we were looking at one of the players in that ecosystem, even they weren't sure how they were going to generate revenue. So I think when a startup solving that problem provides you their financial forecast and they're not exactly sure how they're going to make revenue, I think it's a good indication as to very early in that journey.
Yeah. Speaking of the AI agent, we recently, this quarter, we did an investment into a company called Ambiguous AI. They graduated from the A16 speedrun. We wrote their first check. But to be honest, we are not that bullish still in the AI agent world. We were much less bearish in AI agent when people are talking about in 2024. I think a lot of people talking about 2025. We're gonna see the AI agent everywhere, but I think till now it's a big question mark. I think one of the reason is building, this is my philosophy. I think building LLM is much easier than building AI agent, because LLM, one of the core idea is predict what's the next word coming out. But for agent, it's not just predicting on the language part. You have to, the agent needs to predict what will be the next action gonna be. It needs to understand both the physical world as well as the digital world. So the reason why we pulled the trigger in AI agent till the end of this year, I think, is because the reason I just described. So for 2026 or the future, I believe the AI agent will eventually come into like embedded into our daily life. But whether you're gonna have it in 2026, I'm still like a question mark in this field.
Right.
Any different view, or like you can echo, or if you have different view, you can share.
Okay, talk about different things.
Yeah,
Yeah.
sounds
Okay.
good.
Let's talk about consumers. How many of you remember the movie Avengers and Iron Man? Remember, there's a Tony Stark got a very cool smart glasses with Jarvis in it, and Tony Stark just speak, and then Jarvis handles all the things for Tony, right? I think we are seeing that very similar hardware very soon, except it doesn't just call a missile to kill someone from a satellite yet, but something very similar. So one trend I see in the consumer space is AI wearable hardwares, where a lot of big companies are already exploring, like Meta's AR smart glasses, and OpenAI's rumored hardware co-design with Johnny Ive. It's a hardware. Basically, all this hardware, user wear them, and it's always on, see what you see, hear what you hear, and when you need help, you just ask them, and then the AI agents, the AI model in the hardware creates amazing solution for you because it has all the context. It's basically a personalized AI assistant. I think when that happens, like you have an AI agent with you all the time, and with a personalized Jarvis for you, your life will be much easier. But also, I see concern on this play as well, because if an AI model sees everything I see, hear what I hear, eventually it will think what I think. And with all the data gathered from me, it's such a big issue. I will not trust any big company saying they are not selling my data, especially when they know my willingness to pay on every merchant. So that is bullshit. So I do think in this field there will be a trend of on-device AI and local storage of data, where you give some control for users to control the data they are willing to share. And I think that's a more promising solution here.
Yeah, actually, that echo, like last week, there was Meta announced acquisition of Limitless, which
Yeah.
is like wearable solution, and that can record everything you speak every day and make it very searchable for you. Do you, just a quick follow-up, on the physical AI one, do you feel eventually that would be a game for big tech to like take over that space, or do you feel it's an area where there is no winner takes all the startups eventually will have a share in the market?
I think bigger company got a bigger chance, especially Google and OpenAI, where ChatGPT already knows so much about me. And then when they launch a hardware, obviously I will buy it because it already knows so much what I need, understands what I feel. But also I think small startups, they have their opportunities in some specialized areas. For example, recently a hardware I bought I really like is called Cloud. It's a AI meeting recorder. You can just wear it, you click it, and it just automatically record meeting for you, transcribe and summarize meeting for you. I used to use Granola, but this is like Granola on your body. So I think startups like this, once they find a very vertical use case where users feel the pain and they start using it, eventually there's opportunity.
AI agent. I personally asked my question and an entire community why we need one in the first place, right? There has to be an eventual need to solve some kind of critical mass problem. So the thesis we have is agentic AI will only be successful if it's mass adopted, and it will be only adopted if and only if it has an emotional intelligence built in. Otherwise, it's just one thing, a new toy, you gotta play it, you gotta experiment it, you're gonna get bored, and that's always going to happen. However, it is not an answer to every, it's not a hammer to have answer every nail. Yes, My father was a medical doctor in a very superior place, used medical agents to do some discovery, but that's just helping him to get his time free to get what he wants to do on a surgery at a critical, a person who has like 3 minutes left in his life to gauge him to get his life back for an entire life. So that particular place, yes, because it can help your neurons or biomedical problems to be an expedited process, or you don't need 15 doctors to really see a bleed, which can take the nerve out of the scope. Yes, but we have to go with a broader scale, just like AppLoving other. Will it become a massive company on a NASDAQ? I don't think so. It's not going to happen. If you think that it's going to happen into a Wall Street kind of a news, definitely not. Yes, but if somebody can 100% understand our neurology, our neurons, and 100 billion of those in our brain, and it can rewire and wire those components, so we and us and everybody can actually emotionally connect and relieve the fear of their privacy. Yes. So we are at experimental stage. This experiment is going to go on furiously. It will come to a fruition when mass adoption happens, and the answer is emotional intelligence. Believe it or not, anything you can build today in the world, if you or your solution is not going to touch human values and not touch a human heart by 2030, that is a big, beautiful experiment to fail on and to be proud on.
Oh, I was just going to add, like, the physical world provides plenty of actual real-world examples of where AI would be useful in our everyday lives. To take a perfect example, I think a lot of us up here have administrative assistants or someone that helps us with our airlines and booking, what have you. If you think about how that process and that journey evolves, when you hire this secretary, you then allow them to go ahead and make airline purchases, hotel purchases, car rentals, etc. You send them information. They're empowered to go ahead and make a reservation or come back to you and say, hey, do you like these flights? Do you like this hotel, etc. Then you approve it, and then it's done. Replicate that with software. It's called an agent. There's no different. But you have the same security and guardrails in there, right? You want to make sure that the assistant's not actually using your credit card, making personal purchases and stuff like that. So I think the physical world gives you a perfect proxy for what will happen in the AI world. And so in that sense, the scary part of that example is how many more assistants are going to be placed or out of work very, very soon one day. The flip side to that is to the point about personal information having, I guess, the ultimate edge storage or PII on your device. That's where, in my mind, you get the differentiation between public data and private data. Companies like Experian, where we sit, we actually have proprietary data which the large language models cannot train on. So if you think about that context and you think about from a privacy perspective and how agents and AI could be fully utilized at the consumer level, as long as my personal information on my device or wherever it may be stored can be utilized to create that custom experience for me, then I think that's where it becomes something I would pay for. I mean, I already pay $20 a month for GBT, which I don't know why, but if they could do it at that personalized level and I could have confidence that my personal information is not part of a broader use case to inform other models, I think that's where it becomes hugely valuable and has a ton of utility for the consumer.
Raj, anything to share?
See, I think the personal information part of it, like it's mentioned, might just be a business model situation. Meaning, it's not a privacy issue per se. If you pay enough, you get the data, as we've seen in the last big cycle. But the question maybe is interesting if you look at it from different verticals where you have industry verticals. If it's a deeply regulated industry, the cost of decision making is super high, whether it is finance, banking, or energy. The current models don't necessarily work, especially if it's in law, and there are certain use cases that Harvey is popular or is used extensively, but it's still not clear from an accuracy point of view. if these are verticals where some of these models can be used, so it's still an open area.
Yeah, thanks for that. Definitely, there are areas where the problem is still a largely one that hasn't been solved yet. So for those ones, the solution on privacy data would be more tolerated than other industries. Then with that, we have only like 6 minutes left, so I want to be a little bit quick on some of our questions. And right now there is a very broad trend, like many startups, they raise a lot of money in the AI space, and they focus on growth of their revenue, but actually they are very negative on their profits. Companies such as Lovable and Raply, like for those web coding ones, they have skyrocketed revenue or traffic, but they put so much on go-to-market. Curious from investor perspective, what's your like current investment criteria on those AI companies? Do you also primarily focus on growth of the revenue and the traffic, or do you also have some consideration on how they get to profitability eventually?
I think I would like to share my observation. I call it maybe one of the biggest mistakes that I see founders makes is when founders believe they found the product market fit, they are going to hire like expensive sales like crazy, and then they go to the market and it turns out they don't have a product market fit. So they go back, they fire lay off their very expensive salespeople, and then they redo things again. So I've seen this kind of mistakes happens a lot of time. So, and I would encourage founders to really pay attention to the product market fit before bursting your capital into the go-to-market. Because I think for next year, the fundraising, from the fundraising perspective, my prediction is 2026 will be harder for 2025. Why? There's one research paper regarding the dry powder from the VC. You can see the dry powder from VC has gone a lot lower in the last 2 years. So I believe the VCs, the capital provider, will be more selective next year when they make a decision. So, and then another perspective is when we do contemplating investing in a company, we pay a lot of attention to their cash, call it cash runway. We like company, they stay lean and then stay focused, and the founder pay more attention than the founders on their cash runway, rather than we have to keep asking, hey, what's our cash runway? So yeah, just a little bit mixed bag answer here, but I hope that can be helpful.
See, my quick take is the switching cost for customers is almost zero. So rather than just the quantity of ARR, the quality of ARR becomes a big deal for us as we look at it. So the proverbial 1 million in ARR is not really the figure of merit. It's more how sticky are the customers? Why are they sticky? What's the usage pattern? Yes, monetization is important, but depending on your stage, if usage, if you're on a stage where monetization comes later, then usage becomes important. Stickiness of usage becomes even more important, especially when customers are churning so easily. So quality of ARR becomes more important than just the number.
Yeah, I think I was asking him for the details on this because I think there's this OpenAI fallacy that permeates some of the Silicon Valley startups in the AI space, which is OpenAI's revenue is 20 or 30 billion. How much are they making in profit? Right? They're losing probably equal amount. I don't know what the number is. And that's why the reason why I say that's this just unfortunate fallacy in the Valley is that every other AI startup thinks that they should be able to get to that size and also be losing the same amount of revenue, or have the same amount of losses simultaneously. And that's the problem, is that everyone thinks that in the AI space, it's okay if you just go and get to $1 billion in revenue, as long as you're losing $1 billion and there's someone still willing to fund it because the growth will support it. The reality is all of us here as VCs, we can't pick the winner, but at some point we want to be able to see a path to profitability or some element of scale in these AI models and these AI businesses, or whether or not they're AI native or just an AI company. And I think that's the dilemma we're in today. And to the point about, it's going to be difficult 2026, I think it becomes a difficult 2026 more so because at some point the VCs are going to be like, all right, so when do you turn profit? I can't just continue to fund you. I'm an early stage investor, I got a small fund. Yeah, the big corporates can do it. Obviously, Andreessen's got a ton of money on Andreessen's side as well, but also NVIDIA, corporate ventures, and all the other corporate venture guys can do it. But I think that's the real dilemma you have today, is that there's a scalability issue that a lot of these AI-based startups, they can't communicate that, but yet they think they are the next OpenAI.
Yeah, we don't have too much time, so I'll have quick lightning round. Sorry, do you want to add any?
Just a quick question.
Oh, okay. Yeah, we will open question very quickly. So just a quick lightning question. Please try to answer in just a few words. What's the area you are most cautious of investing today?
Agentic AI.
Sorry, my question is a bit long. Go last. You guys go.
I'll be cautious investing in AI companies who is still using a traditional B2B SaaS revenue pricing model where you charge a fixed fee per month per seat. I think this is absolutely wrong.
So I made a very big mistake investing in space and getting energy from the moon. So I'll be very cautious doing a defense sector and space sector because they're very capital intensive.
Maybe within AI, it's a double-edged sword, but without proprietary data, it's very difficult to establish some sort of a moat. But anybody who says I have proprietary data probably doesn't. So,
Sorry guys, my answer could be a little bit provocative here. I will never invest in company that cold reach out email me.
That's maybe your special.
Find someone to make an intro. Don't cold email.
Okay. Last question. What are you still think white space opportunity or areas open for AI startups? I know it's probably not too many, but if you can name one, helpful.
I'm going to pass on that.
Sorry, the question.
What relatively white space or open opportunities?
Yeah, I have an answer for that. I think it's an intersection of AI and medicine. I think that's going to be huge and exploited. I would heavily focus on that, regardless of AI or not. But intersection of journaling tech with medicine or med devices is going to be 100% explosive because every single person want to live longer. They want to live quality and not just quantity of life. So I think if anybody can focus on mental wellness. So I discovered F word, which is called frustration. There are women in Silicon Valley who have discovered M word called menopause. And there are other old people who are discovering M word, which is called mental wellness. So I think collectively it's a huge trend. And I personally feel that we should all try to find some kind of intersection or interdisciplinary sector to focus on.
I'll be quick here. Two things. One, don't listen to what VC says what you should do. Second, focus on what you're good at and where is your passion. Go after this.
Passion and skills too. Just having a passion doesn't help. Passion adding with skills definitely adds up the value. Because passion can only go for 1 year, 2 years, and then something else will come up and you become passionate for something else. Look, go back and check when you were 17, what were you passionate? Then check 5 years later, 22, 27, 32, if you're over 30. You got to check your passion trends. And then you'll say, oh, you know what, I failed 100 times. So definitely passion with skills, rocket. Remember the cartoon guy from Berkeley? He has 40 passions and ultimately started drawing cartoons in New York Times. That was his skill. So you also have to intersect and manage both the important things and also the trends. So if you can just go to Stanford Design School. You'll just open your mind. Just go to open class. I'll help you get there. And just grind yourself, and you will get an answer. Don't listen to anybody. Only listen to your heart, and not to listen to any of the family members who say this will not work. Because your biggest enemy is next to you, not VC.
As Liz said, don't listen to anybody, so I will shut up here.
Thank you so much to our amazing panelists. We run out of time for audience questions, but please feel free to grab them for during the break.